So hi, so I had a trade on BTCUSD last week, and it was a very interesting trade because it kind of like I think fulfilled every of my trading style, right? So, and this video is actually to just give a short breakdown on how I actually took this trade, and it was actually evening trade. So yeah, so firstly, it was actually firstly it's a counter trend, right? So not every time I trade do I trade counter trend because trust me, it's not the best because it has the worst win rate. So firstly, as you can see, last week was actually bullish, and the week before it was still bullish, although it kind of it rejected from this open close, right, key level. It rejected from this key level from that open close key level, right? There was a rejection there. It's yeah, this was the rejection. But if you watch still, the overall trend for BTC it was still bullish, right? So that was why I would say it was a counter trend. But looking at this at the fortnight candle closure, it was supposed to the market was actually supposed to trend downward, but the overall trend was actually bullish. So that was why we saw some something differently, right? So besides this, I usually trade the 4 hour time frame, right? So yeah, so this is it here. So before moving on, I would want to clear everything so that we have a clear picture, right, of how I took the whole thing trade, right? So firstly, you see that this is a clear A shape key level, right? This was a clear shape key level that was rejected by this particular um, bearish candle, right? That was a clear rejection, right? Now, but there was a but there. The candle closure was very steep. That is, it went so down below, right? And my intended direction was to sell to this fair value gap or the low or the base of this particular candle here. But seeing that the overall market was actually bullish, I had my fears because I wasn't really certain that the market would come that low, right? So I was skeptical about taking the trade. But I saw something that actually made me say, okay, you know what, I'm going to this. I'll actually short this market. So this was what I saw after this candle, after this rejection of the A-shaped key level. The market left another A-shaped key level, right? So this was a clear sign for me that okay, this market that there was still sell in this market, right? So yeah, most times when price rejects a key level, it usually leaves either a another key level or another open close key level that market will usually test again, right? It usually happens many times, right? So that was what gave me the confidence to actually go on with the trade. So then, before going into a trade, I usually set my profit target because it's very important. So this was my profit target. This open close key level here was my profit target, right? But then again, I was like, if I'm targeting this area, it doesn't make any sense to me. Then I moved my profit target to this low. That was where I moved my profit target, right? So now let's form the real bias now. Remember, this was the initial um, rejection, so we are not working with it anymore, right? So I would close it out. So this is the key level I'm working with actually now, right? So this is the current key level. That is was the A-shaped key level that was formed after the rejection. So I'll switch to the 15-minute time frame. But before that, let me check for the time frame. This was the time frame that served the candle, which was 1 a.m. on Friday. Right. So obviously that'll be the candle closure will be by 5 a.m. Right. So yeah, yes. So this is it here. 1 a.m. Then this is 5 a.m. here. This is the 5 a.m. candle. This particular area. Right. This candle is the 5 a.m. But switching to this for 15 minutes time frame, I observed my market pattern has already played out very easily for me. This is what I mean. If you watch here, the rejection already happened again, right? This is the rejection up here, right? This is the rejection of price. Then remember that's our A-shaped key level, right? This is it here, formed for us, right? Now immediately price broke down. This was a clear MSS. This area was a clear MSS. Market broke beyond, right? Then forming a, a fresh structure. The markets rallied up again and left liquidity for us. This was liquidity for us. It left liquidity. That is this area I talk about. This area liquidity left for us, right? So after that, I knew that okay, market was actually going to play out the way I wanted it. So what did I check for? I checked for the key level that was closest to the area I want to take my trade from. That is the supply zone, right? So that's A-shaped key level. This is it again. Let's take it back up, right? We can actually take the trade from there, but that was not where I took the trade from. I took the trade from the closest key level. That's not just that one. I took the trade from this key level here, right? This was it. This key level was the closest to for me. This was my preferred key level. And if you watch here, if we drag it to the extreme here, right? Let me exit this one so it doesn't confuse us. Right, so this was the particular key level I wanted to sell from. And what did market do? Market came there, respected it. It was actually in fact a sniper entry. Right, then I took it from there, placed my entry there. Then the stop loss was where I just placed the stop loss just above that particular sweep. Because many people usually say, "Oh, let your stop loss breathe." No, that's not how I trade. Right? If the market actually pumps above this particular sweep, then sorry, that invalidates the trend for me because I really don't. I enjoy tight stop losses, so just a few pips away from it, right? Then where's my target? This is my intended target, right? So that was it. It was a very easy trade, and if you see, it played out, right? It played out. So let's see. Uh our bias or our markets actually took shape on Friday, right? Then we entered this sell on same Friday at 2 p.m. right, and took profit at market close of that same Friday. So it was a very, very easy trade, and yeah, so this was how I formed my bias for the trade. So yeah. And hopefully I'll be posting more videos because I've been kind of like a icicle for the past few weeks. So but yeah, I'll try to post more videos.